Ladies and gentlemen, my name is Greg McCloskey from ForexLive.com. I'm going to take a Forex quick look at the New Zealand versus US dollar. This currency pair is the weakest, or this currency, the New Zealand dollar, is the weakest of the major currencies today. The move to the downside was started from technicals and then gave a big shove after the Australian CPI data came in weaker than expectations or lower than expectations, and that the New Zealand versus US dollar followed the Aussie versus US dollar to the downside, but it was already on a technical break. Now, the technical break that I speak of, I spoke to yesterday in the video, and if you could recall from yesterday, I spoke about how the high price yesterday stalled ahead to this blue line right here, this step blue line. This is the 100-day moving average. And the low price that we saw in the New York session yesterday stalled ahead of this green line, which was the 200-day moving average. Now, earlier in the day and during Tuesday or Monday's trade, the price did break below the 200-day moving average only briefly before rotating back to the upside. So overall, the price was confined by the 100-day moving average above the 200-day moving average below. Now, in trading yesterday afternoon, the high prices also were stalling near the 100-hour moving average, keeping the sellers more in control. I spoke to this in the video yesterday. And what happened in the Asian session today was the price finally broke below the 200-day moving average. And you see the movement below that level and the momentum to the downside through here, leading into the CPI data that sent the price out further to the downside in a quick fashion through here. And that momentum to the downside has now moved below the 50% retracement of the move up from this low right here to this high right here. That level came in at 0.6154. We also moved below this swing area through here where we had a number of different swing highs, first over here, and then that level became a support level through here with a number of different swing lows here before the market rotated to the upside. In trading last week, Friday to be exact, the price came down to the 50% retracement and the top of this swing area through here and found support buyers that pushed the price back to the upside toward the 100-day moving average. Well, in trading here today, what did we do? We moved below this swing area and we stayed below it through here, and that is increasing the bearish bias, keeping the sellers more in control. So going forward, what next? Well, the price obviously continued its move to the downside, falling below the 61.8. We are starting to move back above that level a little bit. So we are seeing some sort of a corrective move to the upside here in this currency pair. But if the sellers are to remain control, I would expect to see sellers somewhere near this 0.6104 level up to 0.6114 level. I would not expect the price to get back above that area. We just simply have the ceiling that turned to a floor that has the 50% retracement all in that area right there, so that is resistance. So going forward, as long as the price can remain below that area, the sellers remain more in control in New Zealand versus US dollar. It may come ahead of that level, but watch the 61.8% retracement go back below that level and develop momentum. We could see the price move back toward this area near the 56-ish type area through here, 0.6056, and then back toward 0.60293. My name is Greg McCloskey with a look at the New Zealand versus US dollar. Good fortune with your trading. Bye-bye now.